All right, want to build some real wealth? Let's break down the simple roadmap to get you started.
Okay, let's kick things off with a pretty shocking stat. Nearly 40% of adults can't cover a $400 emergency.
You know, not having that safety net is a massive risk. So where do you even start? First things first, you've got to build a strong foundation. This is key before you invest a single penny. And here's why that's so important. High-interest debt will eat your lunch, costing way more than you'd make. So you build an emergency fund. This stops you from panic selling your investments when things get rocky.
Okay, foundation's solid. Now, what are you actually investing for? And for how long?
Are you saving for a house in 5 years? Or maybe retirement in 30? The answer changes everything.
And look at this. It perfectly shows why long-term goals belong in the market, not a savings account.
All right, time for the fun part. Let's talk about the tools you'll use to invest.
What's best depends on where you live, but always look for those sweet tax advantages first.
Seriously, don't get stuck overthinking it. The most important step is just getting started. Period.
And hey, you don't need a lot of cash to begin, but you do need 2 key strategies.
So, let's say you start small. Just $100 a month, that's it.
Well, thanks to the absolute magic of compounding interest over, say, 30 years.
That small, consistent investment could grow to over $140,000. That's some serious growth. Strategy number 2 is diversification. Basically, don't put all your eggs in one basket. Simple as that.
A super simple way to do this is with index funds. You get a piece of hundreds of companies.
Okay, last section. Let's talk about the mindset that really turns all this into long-term success.
First up, automate it. Set up automatic transfers. This takes emotion right out of the equation.
And just look at history. The market always has its ups and downs, but it always recovers. So the lesson is clear. Panic selling is your enemy. Staying calm during the dips is absolutely crucial.
So really, it's not about being rich or some financial genius. It's about consistency and having a plan.
You've got the roadmap now. The only question left is, what's your first step gonna be?